Welcome back. I'm Brett Pachursky with Bear Financial, and today I'm going to talk about strategies to combat a bear market. I feel one of the reasons that investors are timid about the stock market or have trouble recovering after a correction or a market crash or a bear market is that they're relying on their old stocks that used to make them money. Unfortunately, not every stock hits a new high like the stock market has shown it can do decade after decade after decade. Not every industry can recover from a bear market or a correction or a market crash. And it's those stocks' inability to lead, and it's the corporations, sometimes it's the corporations' nature in going out of business or falling out of favor. And when companies fall out of favor of Wall Street and their shares are crushed, those companies can stop trading. Those companies' stocks and shares can go to zero. MCI WorldCom, US Air, JCPenney's, the list goes on and on of companies whose shares stop trading. Those shareholders were not able to participate in the recovery and in the next bull market. So it's the index investing, the mutual funds, the diversification. That approach we've seen is what we feel is a more reliable strategy when you go through a bear market and you're trying to recover into the next bull cycle. People struggle with investing because they are worried about losing money and they don't get what they expect. And they give up, they get frustrated. People invest in the stock market knowing that there's risk. And unfortunately, it's that risk that dictates the direction that people follow when it comes to their strategy. They don't want to take any risk. They don't want to lose a lot of money. From 1980 through 2021, the S&P has lost over 20% 2 times. Over 41 years, 2 times has a stock market produced that horror story that people are so afraid of. So people are expecting that average return, that 10 to 12%. If you look at those same 41 years in the S&P, the stock market only 3 times has been able to achieve an end-year result between 8 and 12%. The average of over 13% in those 41 years is combined by years where the stock market does more than 8 to 12% or it does less than 8 to 12%. You get that average. So what people fear the most rarely happens, and what people are expecting to occur rarely happens. But what do they want? Most investors are looking for that big hit, that 20, 30, 40% return. From 1980 through 2021, 17 times the stock market has yielded, the S&P 500 has returned over 20%. 17 times. And it's staying in the market through those downturns, investing during the corrections, dollar cost averaging, adding more into your investment accounts during the bear markets, and then being in the market, already being invested when those good years come, the bull market phases and the bull market cycles come back. Already being invested and having all of your shares amassed, that's what creates wealth, and that's what builds a portfolio to a significant degree. If you have questions about your investments or you have concerns about the stock market, you can always call our office, send me an email, or schedule a video meeting with me, and it will be with me, right on my website at bearfinancial.com.